Hello YouTube, it is Max here from Daily Market Movements. It is Friday the 8th of October, which sadly means we are coming into the end of this week's trading week. What a week it has been. And before I quickly go over and analyze the moves that we've seen throughout the past 5 days on the gold, Nasdaq100, S&P 500, crude oil, and of course the EUR/USD markets, I just have some very exciting news that I would like to share with you. It's going to take 30 seconds, so just bear with me. This one goes out to all of my viewers that currently trade on our trading platform. If you haven't yet opened an account, you can go and open a trading account on our brokerage at dailymarketmovementstrading.com. That's the website link. In fact, I've left the link in the description of this video. That will take you to this website where you can then go and create an account. And then once you have an account, this is where the exciting news comes in. When you click on deposit to fund your trading account, we now accept credit/debit card. So you just simply click there, put in the amount that you wish to deposit, you click deposit, and of course this page will then pop up where you can then enter all of your credit card details or debit card details, and then within seconds your account will be funded. So that's just a new update that we've got on our trading platform. Very excited to now be accepting credit/debit card, because before we were only accepting cryptocurrencies, PayPal payments, etc. So we are advancing. But back to the markets. Let's start off with the gold over the US dollar. So very importantly to start off with, we have just had the non-farm payrolls. It was a massive disappointment. Estimates were 500,000 jobs added in the month of September, and we only got 194,000. Now this of course is a very good news for the gold markets. Now why is this good news for the gold markets? Well, if the number was good today, it would have almost meant that we would definitely start the tapering process going into November. But now it sends a few question marks whether the Fed will start the tapering process in November, or maybe they just want to wait another month and start it in the month of December. So of course the gold markets have reacted well, because they do not want the tapering process to begin, with gold being a safe haven. And look, we have broken through this downtrend, this short-term downtrend that we've been trading in since the 3rd of September. But we have run into the 50-day EMA, and as well as that, we are now challenging the 23% level on this Fibonacci retracement chart. So the question is now, does this downtrend become that, where we get rejected at the 50-day EMA and this 23% level, and it sends us back down towards 1680, or have we clearly broken through this downtrend, and do we go now up towards the 200-day EMA, which is at 1800? I've mentioned in previous videos that we are currently trading in this ABC correction, and for us to really trade back towards that 1900 area, we would need to snap through the top of this B side. And we've been rejected on 3 previous occasions. If I just move the B top there, if we broke through this 1830 area, that would be a fantastic sign for the gold bulls here, and that would likely send us up towards 1900. If we broke above 1900 and this resistance that occurred here at 1950, would then you're pretty much on your way towards the all-time highs up at 2075. Those who've been watching my video for some time, you know that I am bearish on gold. I do believe a tapering process will begin, whether that's next month or in December. It will begin, though. It has to begin. With the US Fed, they can't continue injecting $120 billion worth of money into the financial markets every single month. It's just absurd. So the tapering process will begin, whether you like it or not, in the near term future, and that will likely send the gold market straight towards the downside. And what comes typically after the tapering process? Well, that's when we get interest rate hikes. So then I do, that is why I am medium to long term bearish on the gold markets. And I think we go down towards 1700, 1680. That's where we found support on these 3 previous occasions. We bounced on the 8th of March 2021, the 30th of March, and then not so long ago, the 9th of August. So once we break below that 1680 area, that pretty much sends us down towards this 1450 area, where we found support and had a huge bounce dating back to March 2020. So that's my outlook for the gold markets. It's been a good week, because we have been able to snap out of that downtrend. So it'll be very interesting to see where we go next week. Of course, there's still a few hours left of today's trading session, so it'll be interesting to monitor gold. But going into next week, I'm hoping that we get rejected at the 50-day EMA. But if I am wrong and we break through it, then we're likely to go up towards a 200-day EMA. Don't forget, guys, this is not financial advice. This is just me sharing my opinion on the markets. But you are, of course, more than happy to copy me, but that is at your own risk. But let's move over to the Nasdaq100 chart here now. The Nasdaq100 has been a fantastic trade. If you recall on Wednesday when we had that dip down towards this uptrend line that we've been trading in, hang on a minute, pretty much since the 30th of October 2020, I said, the question is whether do we bounce here on the uptrend line or do we break down further and go and test a 200-day EMA and make this a 10% correction where we bounce at around 14,000. Now, on Wednesday, I said that I did buy some Nasdaq100 future contracts on the uptrend, but I didn't buy a significant amount because I was still wary that we could potentially break down towards a 200-day EMA. But I did advise to buy on that uptrend. And as you can see, we bounced perfectly from my video on Wednesday, and we've now gone up to test a 50-day EMA. Now, I had this trade in place. The white line represents where I purchased the Nasdaq100, so I was risking 4.35% towards the downside, where I had my stop loss just below the 200-day EMA. And of course, I have my take profit up at the all-time highs here, which would represent just under a 9% gain. So it was a fantastic risk-reward ratio here for the Nasdaq100. But now that we have pretty much bounced at that at that uptrend, this is what I am looking at now, whether we can break above the 50-day EMA. Now, since the non-farm payroll figures have come out, the Nasdaq100 has bounced. I think you have the Dow Jones, which is slightly, it's actually in front of me now, so it's flat. The S&P500 is up ever so slightly, as it does have a few of these big tech names. Now, the non-farm payroll figure coming in worse than expected is actually a positive for the Nasdaq100, because if that meant that the tapering process would commence 1 month later than expected, well then that's another month where $120 billion is getting injected into the financial markets, and of course it kind of prolongs the risk of interest rates starting to be hiked. Now, the Nasdaq100 is the most affected by interest rates. We've seen the 10-year yield bounce from 1.20 all the way up towards 1.60. I think it actually had highs all the way up at 1.70, in the past couple of weeks, and that is why we've seen this 7% correction here in the Nasdaq100, because within the Nasdaq100 there are several huge growth stocks, the likes of Apple, Microsoft, Tesla, Netflix, Facebook, you name it. These companies are valued very, very highly, and traders and investors, they've done a future cash flow. They've calculated how much they anticipate these companies to be making in 5-10 years time. But as soon as you hike the interest rates, well then of course these investors then have to go and recalculate their future cash flows, and of course the figures aren't going to be as pretty as they were when interest rates were down at 0%. So that's why we have seen the Nasdaq100 decline as it has done over the past couple of weeks. But I see this as a turning point, and I think that the Nasdaq100 should be bought here. It's still not too late, and the big question is whether we can break above 50-day EMA. It'll be interesting to see where we close out, and of course we've had that bounce on the RSI. Moving over towards the S&P500. S&P500, again, I explained that, we were likely to go down towards a 200-day EMA. We didn't. We bounced along with the Nasdaq100. That's when the debt ceiling deal was agreed at the Senate, so that's fantastic between the Republicans and Democrats, and we're now testing the 50-day EMA just like the Nasdaq100. So I'm going to go ahead and move this circle. Just save that there. This is the key area now. If we can break above the 50-day EMA, we are likely to go towards the top. So I actually see this as a fantastic buying opportunity. And I'm going to go ahead and put the take profit up at the highs here, and then you can put the stop loss just below the swing lows, or just roughly around there. So, you've got a slightly good risk-reward ratio here. You're risking 2.75% towards the downside, and there's a potential 3.29%. It's not as attractive as the Nasdaq100, but that is a potential trade that you could, that you could place here. And then on the flip side, if the if the S&P 500 was to get rejected here at the 50-day EMA, well then you could place a short position. Personally, I don't like shorting indices. I'm not very fond of shorting the indices, because you only have to zoom out to understand why they over time they have just gone up and up and up. Warren Buffett, one of my trading idols, one of the best traders out there, has always said that if you just buy the US indices and leave it for 10, 20, 30 years, for a few decades, you will make a significant amount of profit, and this is why. So I am not a fan of shorting the indices. Yes, from time to time we do have massive declines, but they're very hard. They're very hard to to a forecast. But this could be a potential short position. If you do enjoy shorting the indices, you've got what if we do get rejected here at the 50-day EMA, you're risking 1.41% and a potential 5.65% down towards a 200-day EMA. But I'm going to go ahead and just go and switch that with my long position, because I do favor a move towards the upside within this green box here, and put that 50-day EMA just below the swing lows there. So you're risking roughly 2.54% to gain 4% if we were to go back towards the all-time high. But moving over to the oil markets, just want to start today's video by saying a huge congratulations to all of our Signal members who followed me on this trade. I did say on Wednesday that we broke through and we went and tested $80 a barrel, and I said we were likely to go and test this 78% level on the Fibonacci chart. We didn't quite get there, but I was a buyer at the crude oil markets down at $75. Actually, sorry, I think it was $76 a barrel, with a take profit up at $78 a barrel and a stop loss down at 74. And as you can see, we bounced perfectly off that $75 a barrel area, and we went and achieved my take profit price. So very, very happy. And I got many messages from my Signal team who also shared that they had made a significant amount of profit. So congratulations. But now it comes down to this. Can we break above $80 a barrel? $80 is a large psychological figure, so it should offer some sort of resistance. And as well as that, I'm not a massive buy up at these high levels on the crude oil. I prefer to wait on the sidelines, because look at the RSI. The RSI is now considered to be overbought. And what historically happens when the RSI hits or trades above 70? Well, we have a massive breakdown. So I think the crude oil markets, they do need a breakdown. We've had this fantastic rally all the way from $62 a barrel, so almost $18 rally here from the lows. So I would like to see a pullback to at least a 200-day EMA, which is currently at $72 a barrel. So sorry, that's a 50-day EMA. I've got my colors wrong there. If I just quickly switch those colors, normally my 50-day is red and my 200-day is blue, so not to confuse you all. There we go. So I would like to see a pullback to at least a 50-day EMA down at $72 a barrel. I think that would offer fantastic value, and I think that area is where you buy. But we've seen the majority of energy stocks do very well this week as well. It's one of the best performing sectors over the past 3 to 6 months. Moving over to the euro US dollar, we've kind of been stuck here below this previous supportive area. I do favor a move down towards 1.15. I think that we will get there. I just closed a sell signal that we had open here in the euro US dollar, where we managed to make a little bit of profit over in the Signal team. So congratulations once again to our Signal team who managed to profit on that trade. Reason that I closed out a little early is because this worries me. The RSI, we are considered to be oversold here. Historically speaking, what happens when we are oversold? Well, we do get a nice bounce. The chart tells you that on many previous occasions. So personally, I would just like to sit on the sideline, see whether we get a bounce at that 50% level here on the retracement level for the Fibonacci chart. But this personally says to me that we are bearish. We've just broken past the previous supportive area, which was all the way up at that 1.16 area, and we're now trading roughly 500 pips below it. So that to me says that we are in a bearish move here towards the downside. It'll be very interesting to see where that goes next week, whether we do get that bounce at the 50%. My personal belief is that we will, but if we did slice through it, which is easily possible, then we could see a move down towards that 61% level here on the Fibonacci chart. So I'm going to wrap it up for this Friday. I will do another follow-up video on Sunday, just going to basically share with you what my trades are. If you would like any personal help, then please do not hesitate to go and visit my website, www.dailymarketmovements.com. Again, I've left this website link in the description of the video. As I mentioned at the start of this video, everything that I've shared with you during today's video, it's not financial advice. I'm not telling you to go and do this. You're entering these trades at your own risk, whether you do decide to copy me or not. But if you would like to learn more about my trades that I'm placing, and you want to follow me step by step, then please don't hesitate. Go go and visit my website. I charge a very small fee of £249 for a year's membership. That's pretty much one profitable trade and you've paid that yearly membership off. So just to have, a share of my knowledge base with these CFD markets, it could benefit you hugely. So just going to wrap it up there, folks. Thank you very much for watching today's video. If you haven't yet, please subscribe to my YouTube channel and give this video a thumbs up. Thank you guys, and I'll see you all on Sunday.